Why would I sell my stock just because it's down? Taxes. The market looked good today. Yes, it did. I know that put a smile on everyone's face. What's up, guys? It's your boy Ty. And if it's your first time on my channel, please hit that like button, subscribe to the channel, and hit that notification bell. If you're a returning viewer, I appreciate you, fam. My channel is all about making sure people are aware of the different avenues to get a piece of the pie. And this video is a redo. So I dropped a video earlier, and if you were one of the 17 people that watched it, I appreciate you. But I left out a key piece of information when I made that video, and I just wanted to correct it. And I took that video down because I didn't want to leave wrong information out there. And of course, I'm not a professional tax advisor. I'm not a professional financial advisor. If you need financial advice, please go seek out that. But I still got too much pride to leave wrong information or missing information out there, and then someone says, oh yeah, I got that from Piece of the Pie with Ty, you know, you can do that. Hey, hold on now. We're gonna make sure I give you at least the right information to my knowledge. All right, so we're talking about when to sell a stock. So a lot of people, know the market has been down. Today has been one of the first green days we saw in a while, and sheesh, look at this. SiTime is up almost 10% today. Yeah, when I made the other video, SiTime was under, I think it was like 191. So yeah, the bounce back is real. You see that there? All right, and that is something to be aware of too. So when we talk about when to sell your stock, you can sell your stock when your stock is down and you can realize a capital loss. You can do that. You see how I bought into SiTime when it was around 300. Yeah, you see 333. I think my average was like 315 before I sold it. So I sold it to realize a capital loss, but I did something that, negates that. So I did it. I sold it. Oh, Camtech. Let's go back to SiTime. I did it and I sold it, and I did make out good because I got an average buy of $203, and now it's up already. So that looks good. You see, you're gonna change your average, but I got back in it too quick. All right, so first off, let's go ahead and start by talking about a capital loss. What is a capital loss and how do you realize it? All right, realizing capital losses. I'm looking at this article by Investopedia, how to deduct stock losses from your tax bill. According to the US tax law, I'm in the US, so we're talking about US, the only capital gains or losses that can impact your income tax bill are realized capital gains or losses. Something becomes realized when you sell it. So a stock loss only becomes realized capital loss after you sell your shares. And that's what I'm talking about. So if you are down and you are looking to get a little bit of benefits on your tax, you might want to look into selling your stock. But it's some stipulations in there. Let's go ahead into the article. And Investopedia has great information, especially when it comes to investing. So some key takeaways to this article. Realized capital losses from stocks can be used to reduce your tax bill. They can. You can use capital losses to offset capital gains during a taxable year, allowing you to remove some income from your tax return. If you don't have capital gains to offset the capital loss, you can use a capital gain as an offset to ordinary income up to $3,000 per year. So you can write off a capital loss up to $3,000. So if you're a Forex trader, an investor, and you have some type of loss in your investments, you can lose up to $3,000 and actually write it off. After that, of course, you need to tighten up. I don't know what you're doing out there, what you're investing into, but you might need to tighten up on taking them losses. To deduct stock market losses, you have to fill out Form 8949 and Schedule D for your tax return. If you own stock that has become worthless because the company went bankrupt and was liquidated, then you can take a total capital loss on the stock. So that sounds great, right? You can take these capital losses and use them on your taxes. But it's one stipulation that I didn't tell you guys about in my last video, and we're going to talk about it right now. It's a rule called wash sale rule, and it's made by the IRS. All right, so we're going to go to Investopedia and check it out. So first off, what is the wash sale rule? The wash sale rule is an Internal Revenue Service, IRS, regulation that prevents a taxpayer from taking a tax deduction for a security sold in a wash sale. The rule defines a wash sale as one that occurs when an individual sells or trades a security at a loss and within 30 days before or after this sale buys a substantially identical stock or security or acquires a contract or option to do so. All right, some key takeaways so y'all get it. So if you sell your stock, right, you have to wait 30 days for that to be a capital loss to go back into that stock. So if you don't want that stock anymore and you sell it because it was just dead weight, you can sell it and then realize it if you don't go back in it for 30 days. All right. A wash sale occurs when an investor sells or trades a security at a loss and within 30 days before or after buys another one that is substantially similar. It also happens if the individual sells the security at a loss and their spouse or company they control buys a substantially similar security within 30 days. So if you married, y'all got a joint account or whatever you got. I don't know what y'all got. Individual accounts, joint accounts, it don't matter. If you married and say you sell Apple for a loss, a big loss because of this tech sell-off, you sell it for a loss, and then the next day your wife jumps in and buys it because it's down, it's at a discount. You just lost, but she like, I'm trying to get in there. You can't write that off as a capital loss because you just had a wash sale. All right. The wash sale rule prevents taxpayers from deducting a capital loss on a sale against the capital gain. All right, so I left this out of my last video and I wanted to make sure I put this on your radar. So, like I said, if your stocks are down, you might want to consider selling it. But if you think it's a great stock, you might want to hold off if you want to get right back in it. All right, so you can sell your stock to realize a capital loss. You can realize that capital loss if it's a stock that's dead weight and you don't want that stock anymore. Go ahead and sell it and you can realize that capital loss. But if it's a stock that you want and you think it will go back up within 30 days, you might want to just hold it. All right. So again, this is just something I'm putting on your radar. You can use stocks that are down to write off and and offset your taxes, offset your capital gains. If you are the type of trader that has had a lot of profits, you can just use it as a capital loss to offset it. And a lot of times you never know when it will come back, so you might sell it, and if it is a stock that you want, you might it might still be down, especially with, you know, the market being how it is. It might still be down and you might still make out good, but you have to wait 30 days for you to realize it. You know, 30 days for you to realize it. And I would like to say I did do it on SiTime and a couple of other stocks. I watched so I got right back in, so I can't realize it as a capital loss, but I did get more for my money. All right, so I did it in SiTime, I did it in Nova. It's Nova. I did it in Nova, and one thing I want to say about Nova, when I did it in Nova, even Nova up for the day too. Oh man, when I did it in Nova, I had 16 shares. And I sold it. Let's see, can I see it? It was at like $19. It was like I woke up and I sold it. And I sold it like right at this 19. And when after I sold it, it went down to like 17. So I was able to buy a whole nother share with that. So I won a little bit on that. And you can do that too on stocks. If you think, you know, it's going to continue to go down, you can sell it and then acquire more if you buy at another dip. But yeah, again, I just wanted to put that on you guys' radar and correct the last video that I did, because I do care about you guys getting a piece of the pie. Thanks for checking me out. Come back and see me.